Let's bring in Michael Yee, Managing Director at Jefferies. He currently has a hold rating and a 375 price target on the stock. Michael, good to see you as always. Overreaction or legitimate reaction here?
Well, great to be here with you. I mean, on two fronts, remember, this has been a super high expectation, super high flying stock all year. I think it just was around $500 earlier this summer. So expectations are super high. You missed the quarter. You lower the guidance by $5 billion, there's going to be a reaction. So I'm not sure it's an overreaction, but I would say that there was a big guidance disappointment today.
I mean, to what extent is it still having to pull back because of its earnings multiple? You mentioned it's already suffered quite a big pullback from its peak in the summer. Is there more to do on that front, on the valuation multiple front?
Well, I think what's important is because there was a big slip up today, I think it's important is that they're going to have to hit the fourth quarter number. I think they're going to have to sign more contracts, get demand up for 2022. And I think they have to execute a lot better. I think if that's the problem, which they just said on the call, that there's a fill-finish capacity and delivery issue going on, they need to fix that. I think that was a big disappointment today. The stock is certainly not cheap per se. It's not a value stock. So there's definitely more room to move down if there's another disappointment.
Bulls, Michael, will say, what about the pipeline? They've got other studies going on, and they're trying to go after other diseases. Where are we on that front? And how much does that drive stock and the sentiment?
Yeah, that's a great question. Obviously, first and foremost, you got to hit the COVID numbers. You got to deliver on that. So that's obviously the key thing front and center. Look, I've been saying before, but they didn't have it today. That was a disappointment. The flu data, they're going to be the first one with the new mRNA flu data coming imminently. And then they also have some data from AstraZeneca and cardiovascular coming in 2 weeks at the AHA conference. I'm hopeful that there's probably a short-term bounce on that, given where the stock is pulled back. So I think there'll be a bounce on that. But look, I think the reality is COVID is still front and center, Sarah, at this time point.
Let's talk as well, whilst we've got you, Michael, about the Merck antiviral and the approval received in the UK. How significant a step is that?
Well, look, this is another impact that the market has digested as a problem for 2022. Part of the problem, it goes back to this summer, is that when the COVID infections are going down, nobody feels like there's a huge urgency to get boosts. Boosting demand is going down. Revenue visibility goes down. Stock has been down. Second is the Merck antiviral pill, which just got approved today in the UK, which was way ahead of expectations. And there's going to be a lot of those headlines coming across the tape. So that's another thing where people are saying, look, infections are going down. We've got pills to treat people. Pfizer data also coming in a month or two. So these things are all hammering people, saying, look, is there really demand next year and the year after for COVID boosting? So that's really what's got the multiple down. It's got the stock pressured, and I expect that that's going to be the continued theme for a while.